Let's connect then with Vikas Khemani, founder Carnelian Capital Advisors, who joins in on the show to talk about his market outlook, the latest report, as well as the disconnect that we're seeing in the economy and the markets. Hi there, Vikas. Good to have you on board. Let's talk about that latest report then that, you've come out with the shift strategy, essentially talking about how every crisis brings about a shift, and this is going to be no different, be it what we saw in 91, 2008. So what exactly is it that you're banking on by way of a shift in strategy post the COVID pandemic in 2020?
Hi, Emma. Good morning. I think in this strategy, what we are talking about is clearly that, a big shift which is expected to happen in the manufacturing space. Basically, if you look at, post-COVID crisis, two big things have changed. One, I think government's focus on making India self-dependent or self-reliant, especially, to reduce our current account trade deficit. And secondly, across the globe, companies across the globe are looking for diversifying away their supply chain. That has got accelerated due to COVID. Other than that, if I look at this, combine this with the fact that India was already improving its cost competitiveness vis-a-vis China, there are almost 70-80%, items where India is no more, cost disadvantageous. In fact, in some cases, India is advantageous. So I think if you look at combination of all these three factors, we believe that we are on the cusp of seeing a reasonably high growth on the manufacturing sector. And government also has put a target of 25% of the GDP coming from manufacturing, which is currently about 15%. Even if you believe that is aggressive, even if you take for a minute 20%, still we are talking about doubling our manufacturing GDP in 5 years' time. And we are seeing a lot of sort of ground level reality. Though this is not just a hope and the big bang announcement just by the government. We are seeing a lot of things moving at the ground level. And out of this, two things will see it through over the long period of time. One is our cost competitiveness, and secondly, this whole global mindset change of diversifying away the supply chain. And we think that this will cut across many sectors, especially where India historically has proven its own advantage, where we have a skill advantage, where we have a cost advantage, where we have domestic demand. Because India is also the only market where you can have a very large domestic demand and you can use it for export base. So that gives you economies of scale. And lastly, where government is also focused. So wherever you see these 3-4 factors coming together, those sectors will, over the next 5-7 years, will see a significant growth. What we call it is, once in a decade kind of opportunity. And I think this is what this big shift, this crisis has brought.
Vikas, so for the longest time, everyone was talking about that disconnect between what the economic reality was versus what the market was doing. Do you think now that, according to you, that there is a significant improvement in economic activity, you can bank on growth picking up, private capex improving, and therefore there's now more alignment between the markets and the economy?
So I think the disconnect in the economy, if you see our markets little ahead of the economy, answer is very much yes, and that but always is the case, both on the upside and the downside. When markets went down to Nifty of less than 7,000, economy was not all that, and it's just the market guided between extremes, right? So right now, I think what we are seeing is a good amount of pickup happening on the ground level. Mainly, I think also this sharp reduction in the interest rates also have had a significant impact, coupled with the liquidity profile changing. So I think that is kind of pushing the activity, but it will still take time for it to become completely normalized. And we are not saying that it's completely normal. The only thing market is doing right now is not factoring in the current year's impact. Market is overlooking current year's impact on the earning, and from next year onwards, things are looking already fine. Once that vaccine is sort of found or starts, then I think market will be probably a lot more comfortable. So we are seeing it in across the board. The amount of real estate activity which has picked up, the velocity in the real estate, which has been wanting for last 3-4 years, is not funny. It's really significant pickup given what has happened in last 3-4 months. So these are the things which are pointing out in the right direction that this is not going to stay here for long. I think probably a couple of quarters more, and then we will slowly start getting back to normalcy very soon.
Okay, so that's the that's really the larger picture there. What does that mean in terms of strategy going forward now, Vikas? What are you focusing on? What's top of mind for you?
I think, investing is, nothing changes in that sense. You have to look at, there's no alternative to look at, good companies, good management, and especially if you can find within the theme which you feel. So, the best way to look at it, if you find a tailwind and go and kind of, invest into the right ship, it will take you far. So, we are seeing tailwind in a couple of sectors. I mentioned that, we are seeing tailwinds in manufacturing, which cuts across many sectors. We are seeing significant amount of tailwind even in IT. We think IT over the next 3-4 years will be doing very, very well. Many of the IT stocks will get re-rated. So you will see combination of both earnings growth as well as the re-rating coming through. And also, we are seeing a decent pickup in the real estate activity, which has been, beaten down over last many years. So we think that you could, if you could, that also as a tailwind of the theme, you can bet over next 3 to 4 years. Real estate also has an impact on the associated sectors like building materials and which basically captures from the real estate growth. And so those are things which we are seeing. So our approach has been same. Look at broader sort of trend, but there's no alternative to identifying good companies, good management, good balance sheets, and then bet on them.
All right. You've also been confident on the other themes, select themes like chemicals, API, for example. Any topping out in some of these pockets? Would you look to book marginal profits here?
So I think, it's been a theme which we've been riding on, and we still think that it's a very large trend which is still unfolding. There's no doubt on that. Some of the stocks have kind of run ahead of the reality, in the sense probably in many stocks I see even 23, 24 earnings kind of also partly factored in. So to that extent, you got to be very careful. So if you're already invested, you can still, ride through. But if you're making a fresh purchase, I would say one should be very careful before doing anything, because you might have a period of consolidation when there's no return. I mean, I'm confident that if you look at 5-year view, it will give return, but there might be a period given whatever recent run-up has happened, because there's almost a frenzy, I would say, in the sector. So if I were to look at only at this point in time, without saying that the trend has not gone away, but from a risk reward of investing perspective, I think sectors like IT, sectors like real estate probably would offer much better risk reward than some of those names. But again, these are very, very name specific, thought specific, but we continue to remain very positive structurally on chemical and API as a theme.
Sure. Because you've been a very strong proponent of the entire shift from unorganized to organized market theory, and that gets a further push because of everyone staying home and the digital transactions which are taking place. Do you think that is the reason perhaps why market is assigning such a hefty premium to some of the platform names, be it across categories from an Info Edge to an India Mart and of course Reliance?
I mean, there's no question on that. There's more of a digital. I mean, to give you some statistics, in US, they took 10 years to have 12% online activity, and that has gone to 23-24% in just less than 3 months' time. So what took you 10 years, you got in 3 months' time, right? So there's no question on that you will see a lot more. And once you get used to a particular habit, you tend to kind of follow through that. So this shift is definitely, here to stay, and this shift is also creating some of these opportunities you mentioned there. One has to obviously see and study name wise and all, because again, typically these are the names where you also tend to have a little bit of hope and froth getting built, and the only reality we will know much later. But I agree with that the platform plays will do well. This shift is here to stay. Maybe many more ideas would come out, many more teams will play. Players like Jio will do phenomenally well. They tend to benefit of this trend in a very, very big way.
Okay, Vikas, on that note, we'll let you go. Thank you so much for sharing insights on your latest note. Good to have you on the show as always.